Welcome to Wales Institute of Science, Technology and Advanced Studies, Pallavaram, Chennai 117. BCom Online Degree Programs, course name Corporate Accounting 1, Block 2, Unit 5, Redemption of Preferences. Meaning of redemption of preferences: shares for which the amount should be repayable after the expiry of a specified period are called redeemable preference shares. The redeemable preference shares redemption is the process of repaying an obligations at pre-arranged amounts and timings. It is a contract giving the right to redeem preference shares within or at the end of the given time period and agreed price. These shares are issued on the terms that shareholders will at a future date be repaid the amount which they invested in a company, along with the frequent payment of a specified amount as return on investment during the tenure of the preference shares. The redemption of preference shares. The redemption date is the maturity date which specifies when repayment takes place and is usually printed on the preference shares certificate. Through the process of redemption, a company can also adjust its financial structures, for example, by eliminating preference shares and replacing those with other securities if future growth of the company makes such change advantageous. So, procedure conditions for redemption of preferences. Some formalities there. Would like to issue preferences, some formalities there. Would like to redeem the redeemable preferences, some formalities there. What is the procedure to make, issue the preferences and redeem the preferences? First, you have to identify. So, do you like to redeem any redeemable preferences? First, only fully paid shares can be redeemable. If the shares are partly paid up, the shares should be converted into fully paid shares, then only the shares going to redeem. Suppose, for example, shares, redeemable preference shares issued to the shareholder 2000 redeemable preference shares at the rate of rupees 100 each. One holding failed to pay shares final call money under shares at the rate of rupees 2 per shares. So, the shares proper message given to the respect shareholder, amount paid to the respects company, these shares only can redeemed. Otherwise, you cannot redeem redeemable preferences. Do you like to redeem redeemable preferences? Only fully paid shares only can redeem. The next, the premium required for redemption is to be paid from the share previsions regarding. The would like to redeem redeemable preferences at premium on redemption. This redemption can adjust against security premium if any. In case if suppose if not sufficient to redeem premium on redemptions, so amount should be adjusted against any profit loss account if any. It is a proper way of raising finance in a dual primary market. A company may face difficult in raising shares capital as its shares are not traded on the stock exchange. Potential investor. So, in putting money into shares that cannot easily be sold may be encouraged to invest if the shares are redeemable by the company. The preference shares may be redeemed when there is a surplus of capital and the surplus funds cannot be utilized in the business for profitable use. In India, the use and redemption of preference shares is governed by Section 55 of the Company Act 2013. Methods of redemption of preferences. What are the methods we are going to redeem any redeemable preferences? First, fresh issue of shares. Then second, capitalization of undistributed profit, and also combination of fresh issue of shares and capitalization of undistributed profit. Suppose would like to redeem redeemable preferences, first out of fresh issue of equity shares can be allowed. In case not sufficient to redeem redeemable preferences out of fresh issue of equity shares, can allow the capitalization of undistributed profit if any. Undistributed profit means liability side capital general reserve and profit and loss account if any. The redemption of preference shares by fresh issue of shares. One of the methods for redemption of preference shares is to be use the proceeds of fresh issue of shares. A company can issue new shares, either equity shares or preference shares, and the proceeds from such new shares can be used for redemption of preference shares. Redemption of preference shares by capitalization of undistributed profit, that is known as another method for redemption of preference shares as per the Company Act is to use the distributable profit in place of using new shares. When shares are redeemed by utilizing distributable profit, an amount equal to the face value of shares redeemed is transferred to capital redemption reserve account by the debiting the distributable profit. In other words, some of the distributable profit are kept aside to ensure that it can never be distributed to shareholders as dividend. Redemption of preference shares by combination of fresh issue of and capitalization of undistributed profit. Suppose we would like to redeem redeemable preference shares, first adjust to fresh issue of equity shares. Not sufficient to fresh issue of equity shares, amount should be adjusted to general reserve or profit and loss account if any. These amount transferred to capital redemption reserve account. Model journal entry. Suppose would like to redeem redeemable preferences. First, you have to find out whether the redeemable preferences fully paid or partly paid. Do you like to redeem any redeemable preferences? Only fully paid shares can redeem. Otherwise, the shares fully paid shares is converted to fully paid shares. Partly paid shares converted to fully paid shares. Then only the redeemable preferences can redeem. When redeemable preference shares redeemed at par value or at premium, first you have to find out. Before redeemed redeemable preference shares, whether the redeemable preference shares redeemed out of fresh issue of equity shares or capitalization of general reserve or profit and loss account, you have to find out. So, okay, when fresh issue of equity shares issued at par value, cash or bank account data to equity share capital account. In case fresh issue of equity shares issued at premium, so bank or cash account data to share capital account to security premium account. The next, after fresh issue of equity shares, they are made to redeem redeemable preference shares. First, even redeemable preference shares are redeemed at par value. Journal entry, redeemable preference shares capital account data to redeemable preference shareholder account. In case redeemable preference shares are redeemed at premium, so journal entry, redeemable preference shares capital account data, premium on redemption account data to redeemable preference shareholder account. Redeemable preference shares can redeemed only either face value of shares or are issued at premium. So discount on issue of redemptions is not applicable redeemable preference shares capital. Next, amount paid to redeemable preference share capital account. Amount paid to redeemable preference shareholder account. So journal entry, redeemable preference shareholder account data to bank or cash account. To bank or cash account. In case redeemable preference shares are redeemed at premium, first we can adjust against security premium if any. In case not fulfill security premium and adjust to fresh issue of equity security premium if any. In case not fulfill both the premium, either balance sheet premium or fresh issue of equity shares premium, then balance amount should adjust against profit and loss accounts if any. So journal entry security premium account data to premium on redemption account. In case not fulfilled, to adjust security premium, fresh issues, either fresh issue or existing security premium in A. In case not fulfilled, so adjust to profit and loss account. Profit and loss account data to security premium on redemption account. Next, when preference has redeemed at par value, redeemed at premium is over. The next, transfer to capital redemption reserve account. When amount transfer to capital redemption reserve account, first, when redeemable preference has redeemed out of fresh issue of equity shares, no need to transfer to capital redemption reserve account. In case not fulfilled, to adjust fresh issue of equity shares, so amount adjust to general reserve, profit and loss account if any. This amount transferred to capital redemption reserve account. Journal entry general reserve account data, profit and loss account data to capital redemption reserve account. When payment is made preference shareholder account data to bank account. Problem number 1. Kudali Limited has part of its shares capital as 5,000 redeemable preference shares of rupees 100 each. When the shares become due for redemption, the company decided that the whole amount will be redeemed out of a fresh issue of equal amount of equity shares of rupees 10 each. So, the journal entry in the books of the company. First, would like to redeem the redeemable preference shares. Whether the redeemable preference shares fully paid or partly paid, you have to find out. Here, 5,000 redeemable preference shares of rupees 100 each already received and issued. So, when the shares become due for redemption, the company decided that the whole amount will be redeemed out of fresh issue of equity shares. So, equity shares value rupees 10 each. So, how many shares issued for the redemption of redeemable preference shares? 5,000 at the rate of 100 each, 5 lakh. 5 lakh divided 10, so 50,000 equity shares issued for the purpose of redemption of shares. New fresh issue of equity shares issued to the public at the rate of rupees 10 per shares. So, how many shares want to issue offer to the public? 5 lakh divided 10, so 50,000 equity shares offered to the public. So, on behalf of redeemable preference shares, their company has to release 50,000 shares at the rate of rupees 10 each. So, journal entry bank account data to equity share capital account. 5 lakh divided 10 is equal to 50,000 equity shares at the rate of rupees 10 each. So, 5 lakh being 50,000 equity shares issued at the rate of 10 each for fresh issue of equity shares for redeemable preference shares. The next journal entry, redeemable preference shares are redeemed at par value. Journal entry, redeemable preference shares capital account data to redeemable preference share holder account. How much? 5 lakh rupees. All the amount fully paid. The next amount paid to redeemable preference share holder account. So, redeemable preference share holder account data to redeemable preference shares holder account data to bank account. How much? Rupees 5 lakh rupees. First, how many shares? Redeemable preference shares 5,000 shares at the rate of rupees 10 each, 5 lakh. So, on behalf of redemption of shares, they are issued on new equity shares. How many shares? So, 5 lakh divided 10, so 50,000 equity shares issued for the purpose of redeemable preference shares. So, journal entry, first journal entry, bank account data to equity share capital 5 lakh rupees. The next amount is 50,000, 5 lakh divided 10 is equal to 50,000 equity shares at the rate of rupees 10 each. So, redeemable preference shares redeemed at par value. Journal entry, redeemable preference shares capital account data to redeemable preference share holder account being 5,000 at the rate of 100 rupees each. Redeemable preference shares redeemed at par value 5 lakh. amount paid to redeemable preference shareholder. So redeemable preference shareholder account data to bank account rupees 5 lakh. Amount paid being amount paid to redeemable preference shareholder 5 lakh rupees. So the next one more option, there is no capitalization adjusted. So because no need to transfer to capital redemption reserve account. Suppose when the capital redemption reserve transfer, so when if any not fulfill the fresh issue of equity shares while redeemable preference shares, so they can allowed adjust to profit or general reserve. This amount only transfer to capital redemption reserve account. Problem number 2. Hina Overseas Limited had an issues 1012% redeemable preference shares of rupees 100 each, repayable at a premium of 10%. The shares are to be redeemed now out of accumulated reserve, which are more than the necessary sum required for redemption. So, the necessary entry in the books of the company, assuming that a premium on redemption of shares has to be written off against the company security premium account. So, Hina Overseas Limited had an issues 1012% redeemable preference shares of rupees 100 each, repayable at a premium 10%. Redeemable preference shares already issued 1012% redeemable preference shares at the rate of rupees 100 each. It is fully paid shares. So 1000 into 100, 1 lakh rupees. 1000 into 100, 1 lakh rupees. That is means preference shareholder due. But at the time of redemption of redeemable preference shares, the company is ready to give a premium at the rate of 10%. So journal entry, these shares can redeem out of profit and loss account or general reserve only, because the shares are to be redeemed out now out of the accumulated reserve only. So first journal entry in the books of Hina Overseas Limited, journal entry. For the month nothing is mentioned. First, when the redeemable preference shares redeemed at par value or at premium, first you have to find out. The next, redeemable preference shares redeemed, whether the shares fully paid or partly paid, you have to find out. So okay, this is fully paid. So 1000 shares at the rate of 12%. So at the rate of rupees 100 each. So 1000 into 100, 1 lakh rupees. 1000 into 100, 1 lakh rupees. But issued at premium 10%. Journal entry 12% redeemable preference share capital account data. Premium on redemption account data to 12% redeemable preference shareholder account. 1000 into 100, 1 lakh debited to 12% redeemable preference share capital account. 1 lakh into 10 by 100, so issued at premium 10%. 10,000 debited to premium on redemption account. To 12% redeemable preference shareholder account, 1 lakh 10,000 rupees. The next journal entry, amount paid to redeemable preference shareholder account. Journal entry, 12% redeemable preference shareholder account data to bank account 1 lakh 10,000 rupees. 1 lakh 10,000 being amount paid to 12% redeemable preference shareholder rupees 1 lakh 10,000. The next amount, so there are two options can adjust. One is a fresh issue of equity shares, but here there is no fresh issue of equity shares. They mentioned these shares are to be redeemed now out of the accumulated reserve. So journal entry, general reserve account data to capital redemption reserve account. How much they can adjust out of general reserve? 1 lakh rupees only. So what about 10,000? 10,000 it should be adjusted against security premium in A. So message given, assuming that the premium on redemption of shares has to be written off against the company's security premium account. Already liability side is security premium is there. Such a premium can adjust against issued at premium on redemption. Journal entry, security premium account data 10,000 to premium on redemption account 10,000. Third, problem number 3. Gurutra Limited, as part of its share capital in 2012 percent redeemable preference shares of rupees 100 each, repayable at a premium of 5%. The shares have now become ready for redemption. It is decided that the whole amount will be redeemed out of fresh issue of rupees 10 each at rate 11 each. The whole amount is received in cash amount and the 12% preference shares are redeemed. So the necessary journal entry in the books of the company. So Gurutra Limited as part of its share capital 2012% redeemable preference shares of rupees 100 each. So it is fully paid. These shares going to redeem at 5% premium. First, whether the premium on redemption out of fresh issue of premium or existing premium, first you have to find out. Okay, the shares have now become ready for redemption. It is decided that whole amount will be redeemed out of fresh issue of equity shares. So journal entry, equity shares issued for the purpose of redemption of preference shares, redeemable preference shares. So premium issued at premium, bank account data to equity share capital account to security premium account. So how many shares issued? So 2000 shares. 2000 at the rate of 100 each, 2 lakh rupees. 2000 divided 100 each, 2 lakh. But face value of shares at the rate of rupees 10 each. 2 lakh divided 10. So 20,000 equity shares issued. New fresh issue of equity shares issued 20,000 shares. Journal entry, bank account data to equity share capital account to security premium account. How many shares? 20,000 shares. How many shares? 20,000. 20,000 into 10, 2 lakh credited to equity share capital account. The next issued at premium of 1 rupees per shares. Issued at premium 1 rupees per shares. Journal entry to security premium 20,000 into 1, 20,000. Total 1 lakh 20,000 debited to bank account, being fresh issue of equity shares issued at the rate of rupees 11 each. So 10 plus 1, 10 means face value, 1 is premium. So total 11 rupees. The whole amount is received in cash and 12% preference shares were redeemed. So what is the redemption at a premium of 5%? Journal entry, 12% redeemable preference shares capital account data, premium on redemption account data to 12% redeemable preference shareholder account. 2000 into 100, 2 lakh debited to 12% redeemable preference shares account. And 5%, 2 lakh 5%, 10,000 rupees debited to premium on redemption account to the redeemable preference shareholder account, 2 lakh 10,000 rupees, being redeemable preference shares redeemed at 5% premium. The next amount paid to redeemable preference shareholder account. So redeemable preference shareholder account data, 12% redeemable preference shareholder account data to bank account or cash account 2 lakh 10,000 rupees. The next, these shares issued, these shares redeemed out of fresh issue of equity shares only. Then what about premium on redemption? So the premium on redemption already fresh issue of equity shares issued at the rate of rupees 1 each. Security premium have rupees 20,000 for fresh issue of security premium. But we have sufficient amount out of security premium. So security premium account data to premium on redemption account rupees 10,000 rupees. The following is the summarized balance sheets of Murugan Limited. The following is the summarized balance sheets of Murugan Limited. Sundry assets 8 lakh 10,000. Sundry assets 8 lakh 10,000. Cash in at bank. Cash at bank 90,000. Cash at bank 90,000. Sundry assets 8 lakh 10,000. Cash at bank 90,000. Liability side, 10% redeemable preference shares of rupees 1,000 shares at the rate of rupees 100 each, 1 lakh. 50,000 equity shares of rupees 10 each, fully paid, 5 lakh. general reserve 50,000, capital reserve 1,50,000, creditors total 9 lakh. For the purpose of redemption of preference shares, the company made a fresh issue of equity shares 4,500 equity shares at the rate of rupees 10 each at a premium of rupees per 10%. So, regarding the redeemable preference share, the company has decided to issue fresh issue of equity shares. How many shares? 4,500 equity shares at the rate of rupees 10 each. 4,500 into 10, 4 lakh 4,500 into 10. So 45,000 fresh issue of equity shares issued to the public. 45,000 fresh issue of equity shares issued to the public. Journal entry bank account data to equity share capital account 4,510 45,000 to security premium account 45,000 10% 4,500 total amount received from the shareholder 49,500 being fresh shares issued with the security premium at the rate of 10%. The next redeemable preference shares redeemed. Whether the shares fully paid or partly paid because 1,000 redeemable preference shares at the rate of rupees 100 each. 1,000 redeemable preference shares at the rate of rupees 100 each. So 1,000 into 100, 1 lakh rupees. 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 That is this. They would like to redeem the redeemable shares. Whether the shares fully paid or partly paid, you have to find out. Okay, 10% redeemable preference shares, 1,000 shares at the rate of rupees 100 each, 1 lakh it is fully paid. These shares they are going to redeem at a 10% premium. So journal entry 10% redeemable preference shares capital account data 1,000 into 100 1 lakh. Premium on redemption account data 1 lakh into 10% 10,000 rupees to redeemable preference share holder account. 10% redeemable preference shares capital account data premium on redemption account data to 10% redeemable preference shareholder account 1 lakh 10,000 rupees 1 lakh 10,000 rupees. These shares received out of fresh issue of equity shares not fulfill the amount means we can adjust against general reserve. So do you want fulfill the redeemable preferences? We need how much? 1 lakh rupees. We have fresh issue of equity shares. We have only 45,000 only. The remaining 55,000 we can adjust against out of general reserve or capital reserve if any. General reserve 50,000, capital reserve 1 lakh 50,000. General reserve how much? So 1 lakh. General reserve 5,000 only. Capital reserve 50,000 we can adjust. So remaining figure transfer to capital redemption reserve account. So we have one. Do you want fulfill? We need only 1 lakh rupees. So but we have only for 45,000 from fresh issue of equity shares. The remaining 55,000 we can adjust against out of general reserve and capital reserve if any. So general reserve total how much is there? 5,000 we can adjust. The remaining 50,000 we can adjust out of capital reserve. Journal entry general reserve account data 5,000. The capital reserve account data 50,000. Total 55,000. Journal entry general reserve account data 5,000. Capital reserve account data 50,000 to capital redemption reserve account 55,000. This amount should be appear on the balance sheet liability side by way of reserve and surplus. Reserve and surplus for the purpose of redemption. Then the shares redeemed out of premium only. So we don't have any security premium in the balance sheet liability side, but fresh issue of equity shares issued at premium 4,500 only. So journal entry security premium account data 4,500 to capital premium on redemption account. Do you want fulfill? We need premium on redemption 10,000 rupees, but we have only 4,500. Then remaining 5,500 we can adjust out of general reserve or capital reserve if any. The next balance. Next amount paid to redeemable preference shareholder account. So 10% redeemable preference shareholder account data to bank account 1,10,000 rupees. Security premium account data to premium on redemption account data is equal to 4,500. 4,500 is over. The next balance sheets. So first, do you want to prepare balance sheet? First you have to find out note number. Note number how is determined? So first share capital. First note number 1 share capital. So how many shares? Equity shares already existing. So how many shares? 50,000 equity shares. Now press issue of equity shares issued 4,500 shares at the rate of both the shares at the rate of 10 rupees each. For 54,500 at the rate of 10 each. So 5,45,000. So note number 1. Note number 2 reserve and surplus. Capital redemption reserve account. Always determine capital redemption reserve account. Do you want redeemable preference shares? We need only 1 lakh rupees. So 45,000 redeemed out of fresh issue of equity shares. The remaining 55,000 adjust against general reserve and capital reserve. These amounts should be appear on the balance sheet's liability side like capital redemption reserve account. Then general reserve worth 1 lakh rupees. General reserve worth 1 lakh rupees minus 10,500. So 10,500. The next 10,500. 1 lakh 10,000 general reserve, 45,000 and 50,000 and 4,500. The remaining figure 89,500 general reserve. So total 1 lakh 44,500 the reserve and surplus. So next trade payable. Sundry creditors is there 1 lakh 50,000. Sundry creditors is there 1 lakh 50,000 rupees. 1 lakh 50,000 is enough. The remaining tangible assets, sundry assets is given under liability side 8 lakh 10,000. Cash and cash equivalents. Cash already existing balance is 90,000. Then press issue of equity shares 49,500 minus for redemption of shares he paid to the redeemable preference shareholder 1 lakh 10,000. So 1 lakh 10,000 plus the 90,000 plus 49,500. So total 1 lakh 39,500 minus 1 lakh 10,000 is equal to 29,500. The cash and cash equivalents 29,500. Balance sheets of Murugan Limited as on the date of so and so date. So particulars, note number, then amount. First equities and liability. First Roman letter 1 shareholder funds. Shareholder means share capital. Note number 1 5 lakh 45,000. Reserve and surplus. Note number 2 1 lakh 44,500. Non-current liability nothing. Non-current liability means debentures, long-term loan. These are items. Nothing is mentioned. Then current liability trade payable. Note number 3 1 lakh 50,000. Total 8 lakh 39,500. Non-current assets. Fixed assets, so tangible assets given 4, note number 8 lakh 10,000. Non-current investment, nothing is there. Current assets, cash and cash equivalent 29,500. Total 8 lakh 39,500. Next, problem number 5. On 30th June 1998, the balance sheets of Sandhya Limited stood as follows. Liability, equity share capital 10 lakh rupees. Redeemable preference share capital 4 lakh. Profit and loss account 3 lakh. Sundry creditors 2 lakh. Total 19 lakh. Asset side sundry assets 14 lakh. Cash at bank 5 lakh. Asset side balance 19 lakh. On the above date, the preference shares had to be redeemed for the purpose 2,000 equity shares of rupees 100 each were issued at the rate of rupees 110. Because the redeemable preference shares redeemed out of fresh issue of equity shares 2,000 equity shares at the rate of rupees 100 each but issued at 110 rupees. Journal entry bank account data to equity share capital account to security premium account 2,000 into 100 2,000 into 100 2 lakh credited to equity share capital account. 2,000 into 10 20,000 credited to security premium account. Total debited to bank account 2 lakh 20,000 being fresh issue of equity shares 2,000 fresh issue of equity shares issued at 110 issued at premium. The company also issued 8% debenture totaling amount 3 lakhs. So bank account data to 8% debenture account to 8% debenture account 3 lakh. The shares and debenture were immediately subscribed and paid upon. The shares, the preference shares were duly redeemed. Journal entry: redeemable preference share capital account data rupees 4 lakh to redeemable preference share holder account 4 lakh, because redeemable preference shares redeemed at a par value. Nothing is mentioned about redeemable preference shares, whether the shares redeemed at par value or at premium. So you have to assume this is redeemed at a par value. The next, redeemable preference shares redeemed, amount paid to redeemable preference shareholder. So redeemable preference shares holder account data to bank account 4 lakh rupees. Next, how many amount do you want to fulfill the redeemable preference shares? We need 4 lakh, but fresh issue of equity shares issued 2 lakh only. What about the remaining 2 lakh? The remaining 2 lakh can adjust against profit loss account. Profit loss account data to capital redemption reserve account 2 lakhs, being unadjusted redeemable preference shares amount adjusted to profit loss account. It should be transferred to capital redemption reserve account 2 lakh rupees. The next, balance sheets. First, you have to prepare note. Note number 1, share capital. Already how many shares they have? So equity shares already 10 lakh rupees is there, 10 lakh. Again fresh issue of equity shares 2 lakh, total 12 lakh. Equity shares total 12 lakh. So 12 lakh divided 100, so 12,000 equity shares at the rate of rupees 100 each, 12 lakh. Existing equity shares 10 lakhs. The next, again on behalf of redeemable preference shares received, so redeemed, the fresh issue of equity shares issued 2,000 shares at the rate of rupees 100 each. So 2,000 plus 10,000, 12,000 equity shares at the rate of 100 each, 12 lakh. Reserve and surplus. Security premium issued 20,000 because the shares redeemed at par value. No need to adjust to security premium. So fully transferred to balance sheets. So say reserve and surplus security premium 20,000. Fresh issue of equity shares issued at premium 20,000. Then capital redemption reserve account. How is determined capital redemption reserve account? Total profit loss account 3 lakhs. So total redeemable preference shares capital we need 4 lakh rupees. We need 4 lakh rupees. We have fresh issue of equity shares 2 lakh. The remaining 2 lakh adjust to profit loss account. Journal entry: profit loss account data to capital redemption reserve account. So 2 lakhs credit reserve and surplus. The next, profit loss account. Total profit loss account value 3 lakhs, but transfer to capital redemption account 2 lakh, remaining 1 lakh. So it should be appear on the balance sheet liability side by way of note number 2, reserve and surplus. The long term borrowing, 8% debenture is there. So fresh issue of equity debentures issued 3 lakh rupees. It's a long term borrowing. And third payable, sundry creditors 2 lakh rupees. Bills payable is nothing is there. So sundry creditors 2 lakh. The next, tangible assets. Sundry assets given 14 lakh. Cash and cash equivalent. Cash at bank balance sheet position 5 lakh. Fresh issue of equity shares. Fresh issue of equity shares 5 lakh 20,000. Then minus 4 lakh means what? Amount paid to redeemable preference shareholder 4 lakh. So total 6 lakhs 20,000. Balance sheets as on the date of Sandhya Limited balance sheets as on the date of 30th June 1998. Equities and liabilities. Shareholder funds. Share capital note number 1, 12 lakh. Reserve and surplus note number 2, 3 lakh 20,000. Non-current liabilities. Long-term borrowing note number 3, 3 lakhs. Current liability, trade payable, note number 4, 2 lakhs, total 20 lakh 20,000 rupees. So total Roman letter 1 plus Roman letter 2 plus Roman letter 3 is equal to 20 lakhs 20,000. Assets, non-current assets, fixed assets, note number 5, 14 lakh. Tangible assets, nothing is there. Non-current investment, nothing. Current assets, cash and cash equivalents, note number 6, 6 lakhs 20,000. Total 20 lakh 20,000 rupees.